What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have some discount dividend stocks, actually REITs, for you to check out. Honestly, they are a deal. I own all three. I plan on being long in them. There's some really good news with one of these REITs. Big acquisition news. I'm going to go over that with you guys. I mean, these three, hopefully I'll get to 100 plus shares. I'm still thinking about a dividend investing strategy to integrate these REITs and my dividend growth stocks and high yield dividend stocks. I'm starting to finalize my strategy, and just looking at these three off to the side, I can't say no to them with buying more shares, and I can't say no to the potential with them. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these three REITs right now. First one I want to go over is VICI Properties, sitting at 31.52. This is one of my favorite experiential real estate investment trusts. VICI is the symbol for this REIT. One of my favorite REITs out there as well. So they specialize in casino and entertainment properties. They've done pretty well. They've expanded pretty well. They've diversified very well. I'm going to go over a few more things. Recent trends, its revenue has increased to $984.20 million. That was up 3.44%. Annually, if you look at the information, the revenue has been up 6.53%. That was at $3.85 billion. So again, funds for operations, very important. But the one thing I like with real estate investment trusts, if there are trends for revenue, look at 2020, it was up 36.97%. 2021 is up 23.17%. 2022 is up 76.24%. Then 2023 is up 35.81%. And 2024 is up 6.53%. So it was still increasing. Now, again, funds for operation are important. I'm not going to go over that, but I really like the way the revenue trends are going. One of my metrics that I look for is increased revenue. Obviously, funds for operation is extremely important. FFO, AFFO, that's extremely important. But dividend growth is also important. And again, that price of being $31.52, how can I say no to that? And also, I'm going to show you the dividend history. I'm going to start in 2018, 29 cents, 2019, 30 cents, 2020, 33 cents, and then 2021, 33 cents, 2022, 36 cents, 2023, 39 cents, 2024, 42 cents, and then 2025, 43 cents. So you're going to see a higher payout ratio with a real estate investment trust. The dividend growth in 5 years is 7.54%. So that payout ratio, again, 76%. Again, 90% of what a real estate investment trust makes has to go back to investors. The number of dividend increases in the last 5 years is 5. So if you bought one share, you made $1.73 with a 5.43% dividend yield. That's very attractive for me. I like high yield. I like dividend growth. It's a hybrid. Perfect. Now let's jump to the next real estate investment trust. This one may surprise you. That is Four Corners Property Trust, sitting at 27.33. Now in the past 5 years, not jumped up too slow or too fast. So that's good for me as an income investor. Yes, I'm a dividend growth investor. It has a dividend yield of 5.20%. But most people don't know what Four Corners Property Trust is or about. I'm going to briefly go over them. So this is the one thing I like about this REIT. Specializes in restaurants. Has 1,121 properties, 99.4% occupancy, 162 brands, 47 states, average lease term 7.3 years. So 34% of their leases is Olive Garden. They're always in demand. There's a lot of people there. Longhorn Steakhouse is 10%. Chili's is 7%. Outback Steakhouse is 2%. Buffalo Wild Wings is 2%. They also have auto service at 11%, quick service restaurants at 11%, other dining and casual dining restaurants at 10%. So again, they're a little diversified in some of that. So I like a little bit of diversification in medical retail, in auto service, just in case if things go bad. But again, Olive Garden, you see them busy. You see Longhorn busy. You see Chili's busy. You see Outback busy all the time. And you see B-dubs right here. I'm pretty sure that's who it is right there. And again, my state of Ohio is pretty good. And Texas is extremely strong as well. So their portfolio is primarily in suburban and located in fast-growing, diverse regions. So that's something to just keep an eye on. That's why I invested in them. It's good to be well diversified in real estate investment trusts like this. I'm going to show you some really good trends as well. Another nice thing to see is their revenue increasing. Revenue's up 7.54% quarterly. December, it was up 4.9%. September 2024, it was up 3.01%. June 2024, it was up 9.54%. So I see these numbers going up. I'm not going to go over the funds for operation, but the numbers are going up. And usually with the trends of the numbers going up, unless if they're in some serious debt, things are really good, and we're going to see the dividend history. So I'm going to show you 2017, it started to take off. 2017, 24 cents for quarterly distribution, 28 cents in 2018, 2019, 29 cents, 2020, 31 cents, 2021, 32 cents, 2022, 33 cents, 2023 right here, it looks like 34 cents, 2024, 35 cents, and 2025, 36 cents. So yes, they are at a high payout ratio. Again, you're going to see that with a REIT. With a 5.12% dividend yield, that's pretty attractive, and you get 142. Again, the dividend growth in 5 years is 2.99%. But again, being well diversified in REITs, I have NNN REIT as well, Prologis, Innovative Industrial Properties. This is a very specific REIT towards, and maybe a little bit of diversification, medical and auto services. Like, it's not strongly centered like Getty Realty. So this is the one thing that I like about Four Corners Property Trust and why I'm well diversified. And I'm going to show you why I'm well diversified in another area with a REIT that has some excellent news recently, which is CareTrust REIT, CTRE, sitting at 2866. So this one's a little bit better compared to Medical Properties Trust at the moment. Okay, CareTrust REIT has been up 76.04% in the past 5 years versus the S&P 104.08%. So that's why buying and holding in the long term helps. Now, would I put CareTrust REIT in my IRA? No, because if you see my post on X, which you need to follow me at Darth Dividend 23, I have a little bit more growers in net asset value or have beaten the S&P in the past 5 years. So I have those. I also have SPLG ETF in my IRA. So this is none of these are IRA material if you ask me. Now, the one nice thing about REITs, if you put them in an IRA, you get the dividends from that. You don't have to kind of report that as income because it's protected in the IRA. You can correct me if I'm wrong. It's not financial advice, of course. That's one strategy people do with REITs. So here's some also good news on CareTrust REIT. And I like the recent trends of CareTrust REIT, but this is not the news that I was going to give you. The revenue was up 36.05% in 2024. Quarterly, it has done very well. Okay, so March, it was up 24.63%. June, it was up 33.63%. September, it was up 38.48%. December, it was up 45.55%. In March, the earnings report, it was up 53.20%. I'm not even going over FFO, but the revenues at 96.62 million in March 2025. March 2024, it was 63.07 million. So you're seeing a nice increase in revenue, which usually gives a good dividend growth. But I want to share you the news. Now, the one thing is they have 78% of their portfolio is skilled nursing facilities, 14% is assisted living, and 8% is campuses, skilled nursing facility, and acute assisted living facility. So they're in 34 states, 408 properties, 43,017 beds, 318 skilled nursing facilities, 52 assisted living. They appear to be a lot more safer and more stable compared to Medical Properties Trust. And Medical Properties Trust is making a comeback, but I want to show you the news. CareTrust REIT closes the acquisition of CareREIT PLC, which enters in the UK market. CareTrust REIT announced today that it has closed the acquisition of CareREIT, a United Kingdom-based healthcare real estate investment trust listed on the London Stock Exchange. The transaction, first announced on March 11, 2025, marks CareTrust's entrance in the UK market and represents a strategic step in the company's mission to expand and diversify its portfolio of healthcare real estate assets. With the completion of the transaction, CareTrust REIT adds to its portfolio 132 care homes comprising approximately of 7,500 beds and 2 healthcare facilities leased in the UK's National Health Service located throughout England, Scotland, and Northern Ireland. All properties are subject to long-term triple net leases across 14 operators with a weighted average remaining of the lease term of approximately 20.2 years and annual inflation-based rent escalators, most with a 2% floor and 4% cap. So they are tapping into the UK and they're going internationally. Kind of reminds me of Medical Properties Trust, but a little bit more stable. So I wanted to show you these 3 REITs. I want to conclude a few things. With my dividend investing strategy, I incorporate a lot of REITs. I'm going to be long-term in these 3 REITs. I really like the moves that are going on with Four Corners Property Trust, FCPT, and CareTrust REIT, CTRE. I am an income investor, dividend growth investor, and a value investor. Some of these are definitely stocks to buy or real estate investment trusts to buy, REITs to buy, however you want to say it. But when it comes to income investing, I'm going to use this income to hopefully retire on dividends in the future and create the dividend snowball effect with investing in these 3 REITs. So I can confirm with you, I'm going to be long term with these and long on these stocks because I'm due to income investing and with my dividend investing strategy. But if something drastically happens, I will sell them. So I'm just going to be honest with you. Something crazy. Huge dividend cut, they go out of business, acquisition, or something like store capital happens. Of course, I'm going to get rid of them. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow. Take care and have a good one. I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence. It is best to seek financial advice with a financial advisor. So go to a financial advisor for financial advice. Go to a tax advisor for tax advice. You have to do your due diligence when it comes to investing. You can gain money, you can lose money. So be aware, make smart financial decisions. And you have to research and do your research when it comes to stocks, REITs, whatever it comes to investing, because you can lose money. I'm going to be very clear with that. You don't have to buy things because I buy things either. I'm just showing you my passive income journey and my FIRE movement or retirement journey. You guys take care and have a great Monday.